Hello, everyone, and welcome to another edition of the market update for Monday, September 19th, 2016. Okay, in front of us, we have a chart of the S&P 500, and yesterday or last week, I spoke about the importance of the S&P 500 staying above its resistance point. We were in a channel situation. Market broke above the channel, and at this point in time, for the market to not collapse back down into this channel, we need to see the market close above this red line, which signifies the top of the market. This is the monthly chart of the S&P 500, and as you can see, the market is finding some support at this red line at this point in time. If we close back in for the month, that will be bearish. If we remain above this red line for the month, that would be bullish, and that will definitely give the bulls some comfort. So that's what's happening with the stock market in general. The bias towards the stock or for the stock market at this point in time still remains to the upside. Taking a look at the Forex, the currency markets. Yes, on Friday, what happened? This is a daily chart of the US dollar index, and I pointed out last week that we were in a triangle consolidation pattern. And what happened was that we broke out of the triangle to the upside. Now, what is happening here is that the market is testing support, because this trend line was formerly resistance. It got broken, and now what was resistance now turns support, and that's what the rule says. And we're seeing the market test this trend line at this point in time. Now, with trading, rules definitely can be broken, and we can continue to move down and even take out these lows with the US dollar index. So that's something we're looking out for. But I must say that the bias at this point in time remains to the upside for the US dollar. Taking another look at it, let's take a look at it with the euro. This is the euro versus the US dollar. We broke out of this minor triangle here, and the market is currently testing the broken support. It's coming up to test this trend line, and we could see another move to the downside and to test this upward sloping trend line in the 111 area. So that's definitely something we could look out for this week. A break of 111 will then open up the 109 lows, and if we do trade below 109, then the next area of support is around 105. So that's what to look out for the US dollar. Taking a look at the US dollar versus the Japanese yen, we're still in our triangular consolidation pattern here, and what we're looking to see is if the market can break below this area of support in the 199 region, and if we do that, we could see a move lower in the USD versus the Japanese yen. Looking at the Canadian dollar is stuck up against resistance. Resistance is up at this 132.53 level. We're just below that level at 131.90. Let me just compress the chart a little. So it remains to see if we can break above the 132 level. If we do break above 132, that would be bullish for the USD versus the Canadian dollar, and we could see further gains. Looking at the gold market, gold is trending slightly to the downside. We have a trend line here, and we have an area of support in the 1300 level. If we break below 1300, that will open us up to the retest this 1250, 1260 level on in the gold market. But the point needs to be emphasized that this still remains an uptrend, and what we could be looking for in the gold market is just a larger pullback in the broader uptrend. Silver, similar situation where we are coming up against support in the 1850 uh, the 1850 area, and we have a sloping trend line down in silver. If we break below 1850, the next area of support will be around 1750 down to $18 in silver. Let's just take a quick look at the crude oil market. Look at the energy sector. Let me clean up this chart a little. And what we could be seeing in oil is a reverse head and shoulders pattern. And when you're trading, no matter what market you're trading, it's very good if you can identify patterns and set up yourself from before. So this will be the left shoulder. This is the head and the right shoulder. Right shoulder, left shoulder, head. So this could be a reversal pattern in crude oil. Is it definitely a reversal pattern? No, this is not confirmed until the market breaks above the neckline, and this comes in at around $51 or so. A lot of traders make the error to think that a pattern, they see a pattern, but the pattern is not completed until the market breaks above that level. So that will be the completion of the reverse head and shoulders, because what could happen is that the market could continue to the downside and the pattern fails. Okay, so that is an update of what's happening in the broader markets. We gave you the dollar, the currencies, the stock market, and the gold and oil market. So you have a very rounded view of what is happening and what's taking place in the markets. If any of you, we are having great successful and our traders are having great success with these free classes. If you'd like to sign up for a free class, click on the link below to get started. Thank you very much for listening, and I hope you all have a wonderful day.